Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today. Good morning. It's Wednesday, December 31st, and this is your London Open Prep. Into year-end, the US dollar is firmer as the Federal Reserve's latest minutes hint at caution on further cuts. China's factory gauges slip back into expansion with Beijing promising more support. And commodities split, with gold powering higher while oil limps into 2026. Starting with the macro picture, the dollar index is pushing higher after the December meeting notes suggested policymakers may pause their easing path. That's weighed on major pairs, with the euro losing ground against the dollar and the pound, and dollar-yen edging up as U.S. yields and the greenback underpin the move. In the U.K., the Bank of England's tone about a slower pace of future cuts is offering the pound some support, nudging euro sterling lower. Over in Japan, the central bank's latest summary shows board members leaning toward continued tightening and even discussing additional hikes in 2026. But the yen is softer this morning against a stronger dollar. China is a bright spot to end the year. Both the official and private manufacturing surveys ticked back above the 50 mark, suggesting tentative stabilization, and President Xi signaled more proactive macro policies to promote qualitative improvement and steady growth. The central bank's daily fix also leaned supportive for the yuan. Equities across Asia were mixed to softer in fin holiday trade, but the data offered a modestly constructive signal for the new year. Corporate headlines stayed light, though reports of a large-scale chip spend next year underscore ongoing demand for computing power. Commodities are telling a two-speed story. Gold extends its rally, trading above 4,350 and on track for its strongest annual gain since 1979. Helped by expectations for U.S. rate cuts and a layer of geopolitical unease. Silver, by contrast, is giving back a chunk of yesterday's jump after a margin increase. Oil remains heavy, with West Texas Intermediate below 58 and staring at a sizable yearly drop, as private inventory data showed a smaller than expected build, and markets look to an OPEC Plus meeting on January 4th, where producers are expected to maintain an output pause. In currencies and sectors, the dollar bid is pressuring the euro and the New Zealand dollar, which is holding losses despite China's better data. Sterling is more resilient, with cable testing support, but euro-sterling softer on the Bank of England's stance. The Aussie is steady in holiday fin volumes, dollar Canada is range-bound, and dollar India is flat. Looking ahead, the calendar is quiet into the holiday, though U.S. weekly jobless claims later today could nudge the dollar. Beyond that, OPEC Plus on January 4th and the full market return the following week will reset liquidity and direction. I'll be watching the Aussie dollar against the U.S. dollar, looking for a modest uptrend if China's improvement keeps risk supported, though a firmer dollar may cap it. Dollar-yen for an uptrend continuation, while U.S. policy caution favors the greenback, and the Bank of Japan stays gradual. Euro-sterling for a downtrend if the Bank of England's slower cut message continues to favor the pound. And gold versus the dollar, where dips may find buyers while the market leans toward easier policy in 2026. In energy, I'm watching West Texas Intermediate for signs of stabilization into that OPEC Plus meeting. The takeaway, markets are finishing the year cautious rather than exuberant, with a stronger dollar, tentative green shoots in China, and an eye on policy signals as we turn the page. That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.